Fannie Mae expects that home prices and the housing market will remain resilient, despite the fact that they're also forecasting a modest recession starting in the second half of the year. I'm Tim Hamilton with StellarQuest Real Estate, and in this video we're going to be quickly going through the most recent Fannie Mae housing market and economic forecast that was just published on April 21st. If you enjoy watching this video, I would really appreciate it if you hit the like button below, and please subscribe if you like to stay up to date on the housing market. And so starting off here, I just wanted to quickly read a few paragraphs directly from the press release that they just published. So they say that incremental tightening in credit conditions owing to the financial fallout will contribute to a modest recession beginning in the second half of 2023. As noted in last month's commentary, the tightening of financial conditions derived from the bank failures in many ways had the same effect that additional Fed funds rate hikes would have had. As such, the ESR group now expects only a single additional 25 basis point hike from the Federal Reserve in May, followed by the reintroduction of monetary easing closer to year end. And so when they say monetary easing, typically that would be the Federal Reserve either cutting rates, their federal funds rate, or doing something like quantitative easing, which would typically have the result of lower mortgage rates. And then moving on to another section, they say while housing demand and home prices have proved more resilient than previously anticipated, the ESR group expects sales activity to remain subdued because of the persistently low inventory of homes for sale, particularly among existing homes. And they go on to say that this is primarily due to what they're calling the lock-in effect. And the lock-in effect is basically homeowners who have locked in an incredibly low interest rate are far less likely to want to make a move, sell their home, give up that low interest rate, and replace it with today's much higher rates. So what we're seeing is a lot less homes being listed for sale, and as a result, there are a lot less, the total sales volume across the country is a lot less than it normally would be. And then finally, we're going to finish up with a quote from Doug Duncan, who is the Senior Vice President and Chief Economist at Fannie Mae. And so he says, the greater than expected resilience of the housing sector to the affordability pressures of higher home prices and mortgage rates is central to our expectation that the recession will be modest. In our view, while it would be premature to expect no further difficulties in the banking sector other than credit tightening, we're maintaining our baseline expectation of a modest recession, as we see signs of a weakening employment market, slowing retail sales, and declining manufacturing activity. So basically they're saying that the housing market is, remaining relatively strong despite the fact that the economy is slowing down. And then he also goes on to say that, however, the rapid response of hopeful homeowners to periodic declines in mortgage rates, even from the currently high rates, gives us additional confidence in our use of the word modest. And so what he's talking about here is that home buyers are jumping at the opportunity when interest rates drop and take a dip. They've been very volatile recently, jumping up over 7%, coming back down to about 6%, and now where we're at today, roughly 6.5%. So buyers are watching these mortgage rates very closely, and when they see them drop sharply, they're jumping out and taking advantage of the opportunity. Now we're going to take a look at a few key numbers from their most recent housing market forecast. And we're going to start by looking at total home sales, and they are expecting home sales to be down quite a bit in 2023 compared to 2022, down 14.6% for a total of 4,841,000 sales. And then they are expecting that to rebound slightly in 2024, jumping 4% to 5,034,000 home sales across the country. That's total home sales, including existing homes and new builds. And then looking at their expectation for home prices, according to the Fannie Mae Home Price Index, they're expecting home prices to be down 1.2% in 2023 on a year-over-year basis. And then they're expecting another 2.2% drop in 2024. And then finally, looking at their mortgage rate expectations, this will be the 30-year fixed rate mortgage rate. In the first quarter of 2023, it averaged 6.4%. They're expecting that to drop to 6.1% in the second quarter, 5.9% in the third quarter, and 5.7% in the fourth quarter. And then moving on to 2024, they're expecting it to continue to drop 5.5% in the first quarter, 5.4% in the second quarter, 5.3% in the third quarter, and 5.2% in the fourth quarter. So overall, they're kind of expecting rates to steadily drop back down closer to that 5% level by the end of 2024. And then finally, we're going to look at just a few quick numbers from their economic forecast as well. And starting with gross domestic product, they are expecting GDP to go negative starting in the second quarter of 2023. So they're expecting that to be down 0.7%. In the third quarter, down 1.5%. And in the fourth quarter, down 1.1%. So that would be, where they're expecting the modest recession to start. That will be at negative 0.5% in the first quarter of 2024 as well, before we start going into the positive direction again at 1.4% in the second quarter, 2.4% in the third quarter, and 2.5% in the fourth quarter. And then looking at the consumer price index, this is, inflation as measured on a year-over-year basis. They're projecting that it will be an average of 5.8% in the first quarter of 2023. That will drop to 4.4% in the second quarter, 3.6% in the third quarter, and 3.3% in the fourth quarter. And then looking at 2024, they're expecting that to drop all the way, continue to drop incrementally down to 2.7% by the end of 2024. And then lastly, looking at the unemployment rate, in the first quarter of 2023, that was at 3.5%. They're expecting that to grow to 4.4% in the fourth quarter of 2023, and then it will continue to grow throughout 2024 all the way up to 5.4% by the fourth quarter. So that wraps it up. Just wanted to touch on these few, quick key points. If you want to see the entire forecast and press release, just let me know. More than happy to send you, all the information from their most recent housing market and economic forecasts. And if you're thinking about buying or selling a home, like I said, feel free to give me a call anytime. I'm more than happy to answer any of your questions and help you out in any way that I can.